I built my mortgage broking business, and it was something that I loved. Why I loved these types of clients was because there was a lot more strategy involved. We really made a difference in their lives and helped them to create a lot of wealth through property. When you get on in your mortgage career as well, it's nice to have clients who aren't as emotional in terms of the transactions that's happening. It's more strategic, it's more around business, it's more around the end goal rather than the transaction. So really good market to get involved in. So let's get into it in terms of going through the strategy and why a lot of brokers don't look at property investor clients is because they feel that it's complex. They feel that it's difficult. They feel that with the lending restrictions and the major banks sort of really tightening the screws on how much people can borrow, that they'd rather not have the conversations and have the headaches in really focusing on this market. For me, as I said, it's a great market because they transact a lot more than your regular sort of clients, because these clients may do a number of transactions a year, or at least one a year, where your average client may do something one every 5 years. So just looking at that, you can do more with less clients and have make more commission and add to someone's life a lot more than you can if it's just a single client. So then, in terms of, I really want to go through this slide and explain how to be the choice for property investors. And when you look at this in terms of the things that you need to know if you want to really position yourself as that expert, you need to really be a student and immerse yourself in learning as much as you possibly can, right? So you've got to understand the property investment market. So you've got to understand the fundamentals of property. So the fundamentals comes down to understanding cash flow, understanding capital growth, understanding leverage. We're in the business of leverage, but a few brokers really understand the power of leverage. And it's really why property, in my opinion, is the asset to invest in, because of the leverage that you can get, being able to sort of borrow up to 80 or 90% in an asset that is not set and forget, but it's set and don't worry. So understanding that, and then also in this, it's understanding the credit and the policy, because this is going to win you a lot of deals and it's going to help you grow your market share with property investors, because it's going to give you the options to continue to help them and grow their property portfolio. I give an example of one of my really good clients in my mortgage broking days. He sort of hit the ceiling with his other broker. He got to a certain level of number of properties and he was unable to grow. It wasn't until I sort of came in, looked at his finances and looked at it a different way, and we were able to find ways to continue to look outside of the square of the traditional lenders that he was using and present his finances in a different way that allowed him to continue to grow his portfolio. So understanding the credit and the policy is going to be really, really important. So at this point in time, you might have leads that you're focusing on at this point. So then the next point is to really get to the next level, which is all around educating and challenging your clients. The Challenger Sale is a great book that I love and I talk about a lot, but it's the people who challenge and educate their clients that are going to really make it in a complex sales environment, which property investing is. And to be able to do that, you really need to be educated yourself to be able to do that. I know when I set the goal and the vision that I wanted to be an expert and market authority in property investment, I set that goal, and long before I was the broker of choice, I was reading the property investment magazines, listening to the podcast, getting as much information as I possibly could to be the expert in that. So this, then you can also bring your existing clients into it and start the education process for your existing clients as well. once you've got the confidence here, this is where you can really go out and build really good referral partners. You're confident, you're educated, you know your stuff, you know your value in the marketplace. So now we want to tell people about it. You've obviously created a lot of content, you're having conversations, you've got stories of clients that you've helped at this point. So it all comes down to looking after your referral partners and creating that reciprocity, right? So having deeper conversations, having annual reviews, and really understanding those clients' deeper needs, you're going to find that you're going to have more ability to refer to others. So to buyer's agents, for example, to accountants, to solicitors, to property managers. There's going to be a lot more reciprocity, and the law of reciprocity is a great one from the book Influence by Robert Cialdini, if you haven't read it. And it's one of those laws that givers gain. And so if you can focus on that and start to build some referral partners, it's going to be really important, because property investment is all about growing a team. And for you to give the best advice and add the most value to your clients, it's around building that team. Then we look at the next part in terms of, well, how can we go a little bit deeper with those referral partners? So for me, we used to run some joint seminars with buyer's agents, accountants, solicitors, and it really became a strategic alliance where, and some of our clients, we would sit down, it would be me, the buyer's agent, the accountant, all in an annual review meeting with them saying, okay, what can this potential client do? So it was all around planning. It's all around creating as much value as you possibly can. And then what you'll generate from that is raving fans. And a client with multiple properties creating wealth, they're going to be raving. They're going to be talking about you and what you do for them at the barbecue. So that will allow you then to be that market authority that we're talking about. The next step above that is really, and where you want to be, is being a leader in this space, being an attraction business and really winning business. And what I mean from this is, as a property investment broker, I used to win business from other brokers. So, and those brokers, and the reason that their clients would give would be, because you're an expert in property investment, Ross. My other broker isn't at that same level as what you are. So what you want to do is get yourself to the point where you can actually win business from not only the banks, but other mortgage brokers as well. So then once we do that, then it comes into the strategy. Okay, well, that's great, Ross. Well, how do we do it? So how do we do it is we create clear goals for our clients. So, some may want to be financially free, right? But what we want to do is make that tangible. So what does financially free mean? Let's make it tangible. So for your client, the goal may be, say, a $2 million net asset position, or it might be they want to replace their income through property investment income. So maybe it's $100,000. So let's, create that tangible goal and help the clients have a clear goal, because this is really going to help their conversation. Much like, playing soccer, if we didn't have a goal, we'd just be kicking the ball around. We want to make something tangible, because that makes our conversations with the clients a lot easier. We want to get the right ingredients to qualify. Some people say, oh, Ross, how do you sort of make sure that the people qualify? And you've got to strip it back, right? And strip it back to the raw ingredients and look at each of the client situations really individually, and how can you present it in its best light. So it may be, stripping it back into the different ingredients, the different loans, looking at the structure of the different loans, looking at the repayment options of the different loans, maybe doing a restructure or refinance to take it over a 30-year loan term so we can get the borrowing capacity right, or maybe it's converting some to interest only, or restructuring it, the interest only periods, and going with a lender that will look at interest only repayments more favorably, enabled to be able to get the right ingredients for the clients to qualify. Or maybe it's presenting these facts. And I had an example when I was broking where we were able to save a client about $30,000 a year in repayments, which freed up a bulk load of serviceability to be able to increase and help them qualify for the next property. So think about that. Also, think about their end goal, and think about looking at things a little bit differently. So let's say, for example, someone's looking at a $500,000 property, and maybe they only qualify with a lender that is has a slightly higher interest rate, right? So if we look at that, so let's say, for example, property grows, houses have grown by about 6.9% over the last 25 years. So if you look at that on a $500,000 property, that property is going to grow by about 35 grand a year, right? If you look at the difference, even if it was a 2% differential in interest rate to get them into the property, that property may cost them an extra $10,000 a year in interest to hold that property based on a $500,000 loan amount. But still, net effect, if the property grows by, and again, if you're still better off by 25 grand, all right? And chances are in the future, their serviceability, their incomes will change, and they'll have the ability to refinance out of that loan. But have we not taken the time to just, flip it and sort of look at their scenario a little bit differently based on the facts, based on the numbers, and present that opportunity to them? We may not, get the client into another property. So we've got to be prepared to look at things a little bit differently. Your competence in property investment is going to build your confidence. So as I mentioned before, do as much work on yourself. If you want to, someone said to me the other day, if you want to 20x your business, if you want to 10x your business, you've got to 20x yourself. So it's the same with your property investment. You need to really build your confidence in that sort of area. In terms of, looking at a sales sort of model in terms of, how we would go about doing our sales. So we'd set the frame, understand, tap into the why. Why you want that? Why do you want that? Why do you want that? So again, ask those deeper questions in terms of, and quite often I ask in a group situation, who would love to be financially free, have a passive income, have peace of mind, have choice in retirement, and build a legacy for their family? And 99% of people put up their hands, right? So you've got to tap into those why. Go a little bit deeper with the clients. As I said, clarify the goals, challenge and educate the clients, go through the qualification quadrant, structure it correctly, provide an excellent solution, and then close. Right? So that's how we do it. How we really do it is we've got to understand their pain points. We've got to have a solution to prevent the risk they're thinking about, and really speak to the promise. As I mentioned, SMART goals. This is what I wanted to talk about a little bit, and I've got a tool, so comment invest below if you want some information on this tool below, and you can get a copy of this. But this is one of the conversations I used to have with a lot of our property investor clients in terms of just looking at the available equity, looking at the maximum purchase price, and then qualifying them, right? So in this case, if we were to have a look at, let's say, for example, the client had 2,200K in available equity. If we took their existing property to 80%, and then they wanted to do maybe they wanted to use that to maximize their borrowing capacity. So we might do an 88% purchase plus LMI. So that means we need to work out that this 200,000 is going to be a 12% deposit plus 5% in cost. So if I divide the 200,000 by the 17%, I get a maximum purchase price just based on equity, in this case, of 1.176 million, right? So this is their qualification, the maximum they could potentially purchase based on their available equity. So if I'm working on an investment return, and depending on where you're looking at, in this case, I'll use a 4% rental return. So this figure here times 4% is going to be a rental return of $47,058. So this allows me now to work out, well, what can they qualify? We know based on their deposit available, the potential maximum purchase price. Now, do they have the serviceability? Once I do the serviceability, then I can work out, what is that maximum purchase price. So this is a conversation that we would have with a lot of clients around how to quickly qualify somebody for property investment. So again, I've got the steps there that you can sort of go through. And again, if you want this, just comment invest below and I'll get you this so you can use it with your clients. So in terms of property investment, the next thing you need to look at is, the structure, right? So if I look at the different things that I used to consider when going through structure, we used to look at the future goals. We used to look at, who are they going to service with? Serviceability and credit policy, and understanding how to maximize serviceability is one of the key things as a broker you need to look at. You need to look at the repayment options in terms of based on their goals. Interest only when they've got a big portfolio is great because that for example, $1,000, if that's what they had available to cover any costs, they may be able to hold more properties. But obviously interest rates are different now, so we need to toss up the strategy around interest only versus P&I. And again, this will, depending on some of your second tier lenders, will service on interest only. So for some lenders, for some borrowers, you may maximize their borrowing capacity by focusing on that. We need to have a look at the opportunities to, that are going to allow us within the future to get cash out, because that's how property investors grow their portfolio, by cashing out and going to the next properties. For big portfolios, I was never a fan of cross-collateralization. The reason being, you put your home at risk, you limit the opportunities. If that property goes up, you've got to value all the properties. It's more flexible if you just want to refinance one property. From a security, from a borrowing capacity, from a strategy point of view, wasn't a big fan of it, but it has its case for your sort of simple, maybe you want one or two, or from an interest rate perspective. But these are considerations that we need to look at. And that feeds into the single or multiple lenders. I know, when you're getting caps and LMI caps and so forth, you may want to split your different lenders that you're looking at. So then we've also got your LMI considerations. Obviously, if you do an increase on a loan that you've done, that you've already paid LMI, you don't pay it again, you just pay on the increase. Versus if you refinance it, you may be up for some new sort of LMI. And then, what we spoke about before in terms of maximizing their borrowing capacity. Yes, if you can own two properties, and in my example where that property is growing by 30 odd grand a year, are you prepared to pay a little bit in mortgage insurance to buy two properties that grow $30,000 a year rather than sort of buying one? So I hope this has been helpful for you in terms of just looking to really help you be the market authority when it comes to property investment. As I mentioned, I've got the investment property maximiser, which has a couple of these slides and the qualification process in it. So comment invest below. I'd love to get that copy. if you're interested in learning more and maybe joining one of our programs, definitely reach out and book a time, because I'd love to talk to you about what we can do and how we can really help you to grow and scale your business. So till next time, I'll see you later.